Good morning, guys. How are we all doing? So happy weekend, everybody. Hope we've all got some exciting plans today. So if you guys wouldn't mind smashing that like button, and we'll get straight over to those charts and our Bitcoin morning update. So yeah, straight over to the 4 hour first. Still looking like we are operating within this ascending triangle at resistance. So that is not the most bearish scenario one could envision. So yeah, I mean, are we going to hold this trend line? Are we going to stay in here until basically Monday, or are we going to break up over this weekend? That's the big question. I mean, yeah, you guys kind of know my thoughts. I reckon we'll probably just range this weekend. So realistically, that means we could break below this trend line, still play out a bit of this zone, and then maybe have a go at this 11k next week. Depending obviously on what stock markets and the dollar do. So yeah, I think we are at a pretty much inflection point in the stock markets. I'm literally seeing analyst after analyst after analyst starting to get very worried about the stock market, and think we're at like basically that's it, is done, end of stock markets. Yeah, I obviously am not too sure how I feel about that. What I do know is that basically trying to call tops and trying to call bottoms, and especially trying to call the top of all tops, macro top of ever, is a pretty asinine endeavor. So I'm not sure why they're bothering, but hey, the trend is your friend, and if, like I said, you guys know that I am, it is looking dicey on stocks. I keep saying that, and if we do break down, then yeah, fair enough. But I'm not necessarily going to start calling it as the end of the stock market. I mean, at the end of the day, if we are going to have a catastrophic fall, well, just in markets, and I say catastrophic fall in markets, I mean it's a catastrophic fall of the financial system. What you'll often get is hyperinflation. These stock markets will just go up and up and up. So that's not quite what these guys are looking at. So yeah, they need to be looking more at the currency than the actual stock market. They need to be looking at the dollar more than the stock market. The dollar is driving them markets. It is basically the Federal Reserve and what they're doing. They're providing liquidity. That is hitting the dollar. That is basically putting making stock markets go up. So they seem to be putting the cart before the horse, or they seem to think the tail is wagging the dog, when at the end of the day, it is down to the Fed and whatever they want to do. And like I said, we could have a financial system collapse, but that would most likely result in hyperinflation. So the stock markets will not go down. They will go up a lot. It will be the currency that will go down, but these same guys are calling the currency to go up. So, I mean, they clearly have a lot of faith in the Fed to increase rates aggressively. That is basically what they're saying. If you think the dollar is gonna go up, you are basically saying the Fed is going to aggressively increase rates. And whilst that may be the right thing to do, and that will dump stock markets, it's just not going to happen. It is not going to happen up until the point that we do start to hyperinflate. But the Fed is reactive. It won't preemptively increase rates to stop the dollar collapsing. It will wait till the dollar's got down to 88, 80, 70, getting towards 60, and then they'll think, right, we've got to stop this now. And then they will increase rates. Everything's reactive. Just look what happened in March. Yep, stock markets are higher now. Well, most of them are higher now, but the stock markets had to collapse first. I say collapse, had to have a massive down leg before the Fed then came in. I mean, it is all reactive in nature. So yeah, the dollar's going to have to considerably go down, which will mean stock markets will have to considerably go up before any potential massive increase of rates to save the dollar, and then obviously the dollar going up and the stock market's going down. So yeah, so calling top. I mean, I guess these guys are literally purely just looking at the chart. A lot of them in the context of Elliott wave. So yeah, fair enough. Yeah, fair enough. But yeah, so anyway, that little rant being said, do I think it's smart to call a top, especially a big macro forever top? Not really. And do I even think they're going to let the market going to collapse before the elections, or just before they have to? I don't think so either. And and also, I mean, like I said, in March, markets had to go down before the Fed stepped in. I mean, there is always, so the Fed is reactive, but there is always the there is always the possibility of the Fed suddenly becoming proactive. I mean, they pretty much well, they didn't really get proactive in the repo markets. They did react to it, but that was obviously the first signs of troubles in the markets. And yeah, and they basically got on top of that pretty quick. So there's always the risk of the Fed becoming proactive, and proactive in the sense of just doing more printing. And yeah, I mean, it seems lazy to think, yeah, the Fed's going to do this, but at the end of the day, the Fed's painted itself into a corner, and when you are a hammer, everything is a nail, and they can only do one thing. And I mean, the nuclear option for the Fed is basically negative interest rates, which at the end of the day, no one thinks they'll do, but no one thought they would even exist before they existed. So yeah, read into that what you will. So anyway, so far as the stock market naysayers, I mean, yeah, like I'm saying, the release valve for all of this is the currency markets, is the dollar, is not stock markets. Stock markets are going to be something that you want to hide in, along with precious metals, along with potentially cryptocurrency, along with all those sorts of things, when you're trying to escape basically what is going on in the currency. So yeah, so anyway, so what we're looking at, consolidation of the highs. It is the weekend, so can we break through? Yeah, of course we can break through this weekend. We'll have to keep an eye on that weekend Wall Street. In fact, we'll get it up now. Not that I'm a massive fan of how this works or how this is calculated. All I'd really do, if there is a big massive drop or a big massive rally, I would then probably pay more attention to that. But often there isn't, because I mean, how well do the people calculating this realistically know what is gonna happen, or the people trading it that are driving those prices know what is gonna happen before the open on Monday, or basically how the open is gonna happen. So but yeah, we'll keep an eye on it, see if we see any massive deviations. But yeah, so yeah, realistically guys, this is the big level that I was telling you about, 11,000 area. I mean, it's like it's secret information, but no, this is the big level that I've been talking about. Get back above 11,000. I mean, like I said, it won't look, if we break down from here, get support at 10.6. Perfectly healthy price action, providing we hold 10.6 and start to move back up again. Do I want to see that? I'd rather we break through here, got back into the zone and played this zone out a bit, then I think the markets will definitely change. But we have a lot of worry in the markets because of what people are looking at in stock markets. I mean, the S&P here, S&P, I mean, it's clearly not looking as bad as the Nasdaq. I mean, you could even draw a trend line. I don't really want to convolute my chart much more, but this is not the worst trend line to draw, and we're still within this. You could even draw it as a sort of a broadening pattern. Well, actually, you're going to struggle to do that, so ignore that. Let me just get rid of that. Here we go. But yeah, so yeah, we aren't doing too bad here. I mean, we are very extended. Well, not very extended. I mean, the rally is just long in the tooth, but this can keep going on for a long time. We've had a nice pullback. That only realistically looks like this pullback we had here, guys. This just looks like this. Yeah, people were getting really worried here, thinking that's it, we're coming down again, including myself. Not worried, but I was just thinking, yeah, this is it, we're coming down. We tagged the, and we basically swing failured above the 786, yeah, and I thought that was it. And to be honest, I mean, you can just visually look at it. This looks like this. So this happened after. You just have to. The trend is your friend. The trend is your friend for a reason. The trend is your friend for a reason, and so to basically say this is it for this trend, and then go to like a weekly and say this is it for this trend, sort of go to a monthly and say this is it for this trend. Yeah, I've already made my feelings clear on what I think about that. I just think that is stupid. So, but they've got Elliott wave telling them. So what I mean, that's why their eliticians are the richest people in the world, because that tells them everything, obviously. And there are no jokes that exist about eliticians all having different counts, because their subject is so precise that they know all. Anyway, it's not just eliticians anyway. It is other people also. But at the end of the day, if you had to pick between, with what is going on in the world now, between markets collapsing and markets hyperinflating, you've got to go with hyperinflating, and markets potentially already starting that hyperinflation. This is what's potentially been going on anyway. So, so anyway, let's not worry too much about that. Let's not worry about what we need to worry about. And when we need to worry about, we've got other things to do. When the financial system collapses, none of this matters anyway. So, it's like so you're not really got to worry. Like I said, you're not really got to worry. But Nasdaq, yeah, you can see. I mean, Nasdaq is looking the worst of them, but just Nasdaq's just the most extended. Look, this was its high, its pre-March dump high. Just look at where we are. So I mean, I pull back into sort of this confluence zone here, and then even if we just trade sideways in the Nasdaq, yeah, just for a long time, and then either break down or go up or whatever, other markets can keep doing what they're doing. Look, the Nasdaq here went through a long period of, I mean, this does look similar to here. Look, we could just trade sideways, done. I mean, I call this sideways. This is up and down, but I mean, you can see in the context of the area there, and then break up to the top. I mean, we traded. I'm trying to find another real example of it. There's not really any real examples of, not really many more real examples of prolonged sideways, but they do happen. So we could just have this in the Nasdaq. We'll have a look at the Russell for sake of completion. I mean, it pretty much looks like what is going on in the Russell. The Russell is clearly struggling. Dollar index managed to stop itself bang on 93. Now managed to close itself bang on 93. Just outside this trend line. But yeah, I mean, it's thereabouts. It's nowhere near the 93.5 that it's got to. And again, we could still trade sideways in this, but I mean, I think I think there is a downward bias to that. BTC dominance took a dip, had a little bounce. So I mean, are we gonna come and take out this low and come down, or are we gonna get constructive and try and take out this high? Again, it's a case of the trend. I don't really have any fundamental views on this. I can't tell you whether I think Bitcoin is going to outperform outperform Bitcoin. All I can do is look at the trend on this. So that's all I can do there. So yeah, back to Bitcoin and these stochastics. 4 hours still looking like it's bullish reset. Price action still looking good. I mean, price action is above 10.9 at the moment, and yeah, this is sort of tailing off now. So this has got potential to move back up if that is the direction we decide to go. 10 hour, I mean, 10 hour is dipping, but like I said, if we break 11,000, we'll go up. 10.8 is pretty much the level. Break below there, then yeah, and we will probably come and test 10.6, and then it's a case of, do we hold 10.6? 12 hour, not quite out of that zone here, not quite back into the purple zone, so it could easily still have some of that nice prolonged upside. And then daily, this is the daily. If the daily gets up to here, we will be through 11k. That is basically a given. And then 2 day gets going. Let's have a look. If the 3 days not turning yet, in 5 days, but once these do turn and we have the 2 day and the daily, guys, and we're above 11k, I can't see any outcome other than we come back to test 12k again. And then it's a case of, well, this is a case of, do we consolidate at that high and break through, or do we just stay in this range for a bit longer? So that is kind of what I'm looking at. I mean, yeah, clearly the downside targets and trigger points are clear. They are basically, yeah, well, losing this trend line, basically breaking below the midpoint pretty much of this range, around this 10.8 area, and then we've got 10.6, which would have to hold. If we lose 10.6 again, fully and formally, from a height of here and not a height of here, then I do think we are then we will be in trouble. Then I won't be like saying, well, we come down really hard and fast. We didn't have a chance. I mean, we wouldn't have come down really hard and fast because we'd only come down from 11,000. So we will be in trouble, and then at that point, I won't expect 10k to hold. In that point, I'll probably be exiting crypto, full stop. So, well, to the long side at least, and I'll just be putting my shorts on basically. So yeah, that's what I'll be looking at there. That is it really. Again, all I'm really looking at here, not all, and that's a lie. Clearly, it's not all I'm looking at. Otherwise, it's all the video would be. All I'm really looking at, I say it again, is basically we're getting weakness downside to sideways off the bi-weekly 9. We are getting downside to sideways, which is currently just sideways off the daily 9. And similarly off the 12-hour 9, but we aren't getting much movement down, guys, and we are at a nice selling zone for anybody that wants to short and get out of crypto. So the fact we aren't making progress to the downside, guys, in my opinion, is actually incredibly bullish, because we have got a lot of daily, well, we've basically got daily and 12-hour 9s and major resistance, which we are just sat at. And as it stands, and this clearly may change, so obviously we've got to be Bayesian about this, we've got to be reactive to basically what happens. Until that changes, this is looking incredibly bullish, because the bulls are not able to take control of this market. So that's how I'm viewing this at the moment. So yeah, but we are getting to the point where it's like we have sort of got clear defined levels, but for macro reversals, which are obviously the most important type of reversals. But yeah, again, a lot of it is down to the stock market and the dollar, and yeah, there's a lot of worry and indecision around that. But I'm not really sharing too much of that at the moment. So yeah, there we go. So remember, this is not a financial advice. I'm not a financial advisor. Always do your own research. Fantasy football deadline in 1 hour for you guys that are playing it, and I'm aware a lot of you aren't, because not a lot of you join the league. But fantasy football is good, you know, guys, because it's basically stats. It's basically statistics. I basically had my best year in fantasy football when I had my very first year, which was when I started working at this basically hedge fund. And what happened was I only started in the second game week, because I just didn't start in the first game week, because I just didn't really know about it until the second game week. So I was a week behind, and that's when I got my highest ranking position. And I think I came second in the overall company of about 30 or 40 people, by 1 point. And bear in mind, I missed a whole game week. So and all I was doing was just looking at stats and probabilities, because I didn't know anything about football. I'd never played fantasy football before, and did pretty well. And since I then started to have a bias with football, as I started to learn more, I then proceeded to not do as well. So just there you go, read into that what you will. But yeah, fantasy football is interesting. But anyway, so yeah, again, not financial advice. Always do your own research, and I'll speak to you guys this evening, probably.